Welcome back, dear learners, from the ad break. Before the ad break, we found out the reasons why a business would allow allowances to its debtors. Some of them were when the goods are damaged, when the wrong goods were given to the debtor. But we also realized that an allowance can also be allowed when we have overcharged a particular debtor. But it is important to know, in accounting, source documents are very important. Because when we record transactions, we need to have source documents. So, when there is an allowance, what then is the source document? What you see on your screen is what we call a duplicate credit note. When a debtor returns goods or requests for an allowance, the debtor will send back the goods together with a debit note. So, remember, the debtor has taken the goods to his or her business. When they bring back the goods, they bring back the goods with a debit note. Goods must always be accompanied by a source document. So when the debtor brings back the goods to our business, they'll come back with a debit note. And once our business approves the return, they then issue what we call a credit note. Now you have to understand that we will give the customer the original credit note, all right? And then we will then keep what is known as the duplicate credit note. This is what you see over here, all right? Whereby we are dealing with Ox Traders. And then the amount on the credit note is 405. Remember, source documents are very important. When we are recording in our journal, we rely on our source documents. We will now move on to the preparation of your debtors' allowances journal. Here is our debtors' allowances journal preparation. It says on the information, enter the transactions below into the debtors' allowances journal of Rakibu Traders. Goods are sold at 100% profit markup. By now, you should be knowing how to calculate your selling price when you're given markup, or your cost price as well, if you are given the markup. The transactions are as follows. Received goods returned by MOO. So MOO in this case is our debtor and is returning goods back to the business. With a debit note, remember, the goods will come back with a debit note. And the amount on the debit note is 1,000. And we then issued a credit note number 009. Let us now quickly see how we would record this in the debtors' journal. Remember the UK method. This will assist us in calculating our cost of sales. I'm going to quickly show you as we do it together. Here is our debtors' journal of Rakibu Traders. Remember, we are going to record the credit note number, which is 009. There is the credit note number 009. And the day is the 17th, as you see here. The debtor in question is MOO. And then MOO is returned goods of 1,000. So we find on debtors allowances 1,000. Now, on the cost of sales, we now need to get cost of sales. But remember that your cost is always 100%. Your markup in this particular question, we were told it is 100% as well. That means my selling price becomes 200%. So I would then implement the UK method, which simply says, what is it that you want? Here we are given 1,000 Rand as the selling price. As we're told, the amount on the invoice is 1,000. So what is it that I want? I want the cost, which is your 100 here. So I'll come here. Whenever I want something, I put it on top. And then I say, what do I have? I have 200. Then I multiply it by what I have in rands now, in rands. And then quickly punch that in your calculator. You are now saying 100 over 200. Multiply that by 1,000. Tell me how much do you see on your calculator. You should get an amount, which is 500. That is how we get this cost of sales of 500. Now, we will now come to the next transaction. On the 25th, issued a credit note to S. Susan for 1,200. So we'll come here. Remember, there is our credit note number 10. The date is the 25th. And then S. Susan. 1,200, the same amount we find here. But now, remember, cost of sales, what is it that you want? You want 100. What do you have? 200. How much do we multiply here with? Yes, you must use your 1,200. Please quickly punch that in your calculator. And then you will get 600 rands. This is how you get the 600 over here. Now, remember, after preparing every journal, you must close it up. So I'm now saying 1,000 plus 1.2 gives you 2.2. Then I will say my 500 plus my 600, I get my 1,100. Now, remember, after creating any journal, you need to post it. So we are now quickly going to post this journal to the general ledger. Remember, here is our debtors allowances journal. We are now going to post it to our general ledger. Very important that on the debtors allowances amount, we will debit our debtors allowances. In other words, we'll create a debtors allowances account, and then we'll credit what we call the debtors control. Remember, debtors control is your asset. So on the 2.2, we will have a debit as well as a credit, double entry. And then the next one is on the 1,100. We will debit our trading stock, and then we will credit our cost of sales. That is when goods have been returned. Okay, so that is what you see over there. I want us now to quickly do it practically. Practically, make sure whatever I'm doing, you're also writing. All right? So make sure what I'm doing here, you do the same as well. Let's do it practically then. Okay. Here, when you see that you have your 2,200, we are going to post it to the debtors control. Remember, debtors control, this is an asset account. That means it increases on the debit side. On the debit side, it's a plus. On the credit side, it is a minus. So you have your balance, 20,000. Sales, when we would have sold goods to debtors, hence you see here we have sales from the DJ. And then debtors allowances, so we have debtors now that have returned goods to us. There you see the 2,200. Okay? And then once the goods are returned to us, then we can close off the ledger account. So remember, side with the highest amount, we add, we get 54, and then the balance becomes 51,800. Okay, there is your 2.2. But remember, double entry, I must also have what we call the debtors allowances account. And then I am now going to debit it because in the debtors control, I have credited it to fulfill double entry. So come here on the debit side, I'll say debtors control and then 2,200. So this 2,200 has been recorded in two accounts, debtors control as well as debtors allowances. So the question that you now have in your mind is, what then happens to the cost of sales amount? Let's see what to do with the cost of sales amount. With the cost of sales amount, we will now first have cost of sales. Remember, your cost of sales increases on the debit side, all right? And then it decreases on the credit side. So when we are dealing now with the 1,100, it is going now to decrease our cost of sales. Hence, you see on the credit side, 1,100. And then when we then look at the other account, which is your trading stock, remember, in your trading stock, we would have sold goods. And then when we sell goods, then we have cost of sales here, DJ. Remember, trading stock is also an asset. Thank you. That means it increases where? On the debit side, and it decreases on the credit side. So once a debtor is returning goods to us, what is happening to our stock now? Our stock will increase because a debtor is returning goods to us. Hence you see here, I have debited with cost of sales in my trading stock account 1,100. Therefore, we have completed double entry principle. Dear learners, we're going to go for a quick break. I'm going to see you after the short break.